howdy folks, and welcome to yet another edition of Smarter Money Matters. It really does, and we're going to be doing a little bit of a different format going forward, something that we're going to call Winning with Camarda. And it's really important we think, to kind of remind you from time to time about our value proposition, maybe remind you of why you came to us and the differences between other advisors. And this was inspired by a very good friend and longtime client that had, and I'm sure all of you on occasion these days are being constantly approached by other advisors. You see ads on Facebook or reports or calls or referrals from your friends. It's just the world that we live in, and we really, really appreciate your loyalty. But it's only human nature to kind of check and shop around, right? So this series was inspired by this fellow that we worked with for a long time that was approached under the guise of everything you're getting with Camarda at a lower price. And which turned out really not to be the case, as we kind of went through the analysis. I think you were away, but Lou and I, we spent quite a bit of time going through it, and analyzing. And it turned out that the other advisor really was mostly a commission agent, kind of a part-time advisor in more of the benefits business, really than an advisor. We looked up the licenses, and there's a whole just different schema of benefits. So we kind of went through, and at the end of the analysis. This particular person said, "Gee whiz, thanks. I forgot all that stuff while I came to you. What a difference!" But people tend, that when the relationship I think just starts, but as time passes and you kind of get used to us, the distinction between us and everybody else kind of blurs. So I think it'd be helpful kind of go through some of the differences that set us apart. So I guess to begin with, Lou or Anna, do you want to, maybe we're not going to overwhelm them, obviously. We'll talk a little bit about each one maybe with the weekly videos. And then we're going to get to what's happening in the investment worlds and current events and some stuff that we think you'd be really interested in. Mm-hmm. But any comments that you guys would like to begin with? I tend to talk too much.
Yeah, no, I mean, I'll only say, just kind of to piggyback on what you were saying, that the client that we're referring to for this video is, just basically forgot what all the benefits are that we offer and bring to the table. And, he was just looking at the fees that he was going to get from this other advisory firm, not realizing that they were just barely managing the portfolio, not even doing that. It was a buy and hold portfolio, so it's just kind of expense ratios to go alongside with that. And
so there's a lot more expenses underneath the surface that weren't obvious besides just the fees, because these people charge both a fee and commissions and other, which they weren't completely upfront about it.
Correct. So it appeared like it was a much cheaper and better deal up front, not realizing that behind in the fine print it was actually a lot more messy than
and also cookie cutter product that came right off the shelf, right?
Very much
they
so.
weren't really managing it. It was from an insurance company.
Correct.
And do you have anything to add to that?
Yeah, I mean, I think where we add a lot of value, right, is we look at the holistic picture for clients, right? We're not just looking at investments, right? You can find a lot of people that'll manage investments, not as well as we do, we think. But on top of that, we're doing the estate planning, the tax planning, other financial planning, looking at that whole picture, and there's so much value there.
And actually, we had a case today, that, so at the end, anyway, after going through this analysis, we got an email, thank you so much, basically, I forgot all that, thanks for saving me or helping me avoid disaster or something like that. So that's why we're kind of reminding you guys, because once, we kind of get into the groove of working with you, a lot of what made us special and why you came to us in the first place, it gets forgotten. And that's really a good point. We'll maybe seg off on this one and get into the slides for the next week. But we had another case today where we went through and looked at the person's tax return, and it had a CPA, but the CPA was missing a pretty critical opportunity with real estate deductions and also increasing the audit risk a little bit. They forgot to fill something in the Schedule E where that could have prompted some IRS inquiry.
It was completely unaware of asset protection and LLC possibilities of putting his LLC his real estate in LLCs to
yeah, and actually the attorney that he had, don't forget to follow up with her, by the way. The attorney that he had, he called because we said, okay, you want charging order protection, that's what this is, and he called this attorney, and the attorney said, that's a good idea, I better look into that. And I go on the call with him today, I go, Lou, is that the attorney that he should do this work with? And your answer was?
I said I wouldn't do it, but
because you don't want them learning.
You don't want
to
yeah, exactly.
So, and also we reviewed his estate trust, and he had I shouldn't say a good trust. He had a legally sufficient trust that was probably about this thick, had a bunch of stuff in there that, what I call a kitchen sink trust. It's kind of like a template where, an attorney would buy a software package, fill in your name, who's your kids, whatever, and prints out all these pages, but it's not a custom crafted document designed to address the interests and needs of your family. So we went through that and made some recommendations about how to simplify it and improve it, and then talk about the asset protection. And all of this we're constantly doing as we go through our process all year long, with the financial planning sequence that we built, which most other advisors might pay lip service to, but not really understand. And often they'll say, we'll do this and then we'll do that to get your business. But the depth of knowledge and execution is usually hugely different.
Yeah. And the other thing you mentioned, I'll just kind of again piggyback on what you were saying. So about his CPA tax preparer, not to pick on her, but she was basically, was asking her a question, or he, I think it was a her, but that doesn't matter. But,
aren't they all?
but he was asking her a question, and she was saying, oh, you should talk to your financial advisor at the time. And then he was asking the financial advisor, and he was saying, hey, go talk to your CPA. So it was that tennis or tennis match back and forth, and the client wasn't getting.
And the reason is because neither one of them knew the answer. And I got to tell you, there's something that I've been saying this for decades. If you ask an advisor, an attorney, or a CPA, or a doctor, whatever, a question, and you don't get an answer you understand, there's only two reasons. Either they don't want you to know the truth, or they don't know the answer and they don't want you to know the answer. They just give you double talk. There's nothing in medicine or law or investment management or taxes that you can't explain in ordinary terms so people understand it. Let's talk about asset protection. Somebody sues you and the judge says, okay, it's Lou's fault. You've harmed this person. You owe them $1 million. Now, what assets do you have, Lou, that you can pay the $1 million? And if assets are asset protected, like using LLCs that are properly formed and satisfy their requirements of state law, any idiot can set up an LLC. But unless it conforms to the law in the state that offers asset protection, it doesn't work. But if it does, your attorney will say, Judge, I'm sorry, that all that $5 million in real estate in an LLC is charging order protected. Your charging order cannot be executed against that asset. It's protected. And that's it. Who can't understand that? Except people that don't really understand, what asset protection is, and we'll give you a bunch of mumbo jumbo. Anyway, that's enough about us for now. But we're going to keep beating this drum and please feed back to us if you like this information, if you want more of it. And we're going to, because I'm really planning an extended series that's going to give you guys not only differentiating us, but also give you a lot of really, really good wealth management information that you can apply in your own situations and better understand what we're doing for us. So think of this also as kind of a mini course in advanced wealth management. So good. Let's talk about maybe what's going on in the world. And we haven't really addressed this, I think, in a few weeks. But the world, in my view, is changing in amazing ways, right? The price of oil, and as we record this today, May 1st, last April. The oil hit a high again, I think, last night of $120 a barrel, and that's not going to change anytime soon for a lot of reasons. The situation in Iran is going to be protracted. I think it'll eventually be resolved, in our favor, but who knows? I mean, there's really no guarantee of the outcome. It's costing a lot of money. It's costing a lot of political capital, in the current administration. There's just a lot of problems. It was interesting that the United Oil Emirates resigned from OPEC yesterday. Did you see that?
Wow.
So did you notice that?
Yeah.
That's huge. And why? Because they're like the redheaded stepchild of the Middle East. Iran has been, bragging to Saudi Arabia and Oman about we're going to beat up on the UAE, which is right across the Strait of Hormuz, and they have been barraging them with missiles, hitting their airport, hitting Abu Dhabi and Dubai, and the UAE has not responded, probably feeling, for whatever reason, constrained. I said, why don't you fight back? Why are you just letting them blow up all your stuff over here? That's probably going to change. And I think one of the reasons they very pointedly walked away from Saudi Arabia and the rest of OPEC, in a very public way that was really thumbing their nose at Saudi Arabia, was to make, a very strong statement that, okay, those days are over. Now we're just going to take care of ourselves. So things are changing in a very, very fundamental way. And I think that the price of oil, because of this tension, is going to remain elevated for a long time, which is good for U.S. oil producers and our interest in some of the energy components in our portfolio. But it's going to be bad for consumers. So let's talk about why. Have you guys given much thought to this? And what are your thoughts on inflation going forward? Let's start with Anna.
Yeah, I mean, when you think of gas and gas products, diesel, fertilizer, some of these various products that come through that strait and from the Middle East, yes, the gas prices at the pump have gone up, but also products that we buy, shipping, costs, all of that is inflated due to the higher cost of oil, diesel, and these products. And we're not maybe seeing that fully trickling into the economy yet, but when it does, it'll cause inflation, likely to go up, which then constrains the Federal Reserve, who, indicated earlier this year they were interested in cutting rates potentially. If inflation's up, it might constrain them from doing that. And
then probably will likely go the other way. I mean, that's really the only, ammunition against against inflation is higher interest rates. So people stop borrowing to chill the economy. What are your thoughts on that, Lou?
Well, Anna and I talked about this a little bit yesterday in one of the meetings we had here internally. But you don't only see it at the gas pump, but you're also seeing it internationally. Like you were mentioning in Asia and Europe, and some of these major airlines are cutting cutting flights this summer because of increased oil and gas and was kerosene prices, right? That they use for airplanes.
It's jet fuel. But a lot of people don't realize jet fuel is like kerosene. It's like diesel.
Right. So I mean, that's just kind of trickle effect of this mess that's going on over in the Middle East. Is just it's not just the oil prices, the gas pump for us, but it's also increasing internationally, and that's going to hurt international markets potentially, and then obviously increase prices and inflation here locally for us for the rest of the goods.
A lot of folks, we don't probably appreciate all the gases. You know what you're paying for gas these days?
It's like
419. I think I saw.
I
think I
need
saw.
to fill up today. So,
Actually,
yeah.
me too.
Is that higher than usual?
Yes, sir.
Woo, maybe. In fact, I go to Costco to buy wine a lot. Thank goodness Mr. Wonderful from Shark Tank turned me on to that because they got some really good stuff.
Yeah.
But they also sell gas. The lines for gas at Costco, dude, you can't get into Costco.
Yeah.
I mean, people park right in the middle of the road. They don't want to lose their place in line. So, so as painful as it is here, a lot of people don't appreciate that the United States, as the largest producer of oil in the world, which a lot of people don't appreciate, since fracking came to town, that we've been relatively insulated. The other thing is that there's been a lot of oil floating, right? Tankers that left the Persian Gulf and were in transit before the hostilities really got, heated with Iran. And that stuff has got across the ocean, gone to market, to the refineries, but that pipeline is shut off. Those tankers ain't rolling anymore. Yeah. So the price of gasoline and other petroleum products around the world has gone up a lot faster. Inflation is really going crazy. And to the extent that we buy goods from overseas, do you? I do. It's a lot, a lot of consumption, almost everything from Amazon, still comes from China or other countries. The production cost of that stuff, which is still months down the road before it goes through manufacturing and shipping and retail and so forth, but is going to go through the roof. Sure. And then the other thing is that just because we produce oil in the United States, if you had the oil well, you're going to sell it cheap because you're a good American, you're going to get the highest price you can. That's being a good American, right? so eventually, the discounting that we're enjoying is going to go away. Yep. So things are changing a lot. I hope it's not going to be like the stagflationary 70s that many folks in my generation remember painfully, where the economy was stalled in a recession, prices kept going up, people would get money and spend it as fast as they can before prices went higher. It was a real nightmare time, not good for the market either. Hopefully that's not what's coming, but there is certainly some sea changes in the global economy that are going to affect a lot of things in a lot of ways. And the risk to the market, and I think we'll probably tail it off here unless you guys have any final comments. The risk to the market is, remember, this is all coming on top of a market that is hyper extended value-wise. Now, we're at the highest valuations in recorded history, except for the dot-com bust of 2000 to 2003, when tech stocks dropped like 80%. Was it Cisco, I think, just broke even last week? Yeah. Since 2002, something like that. Is that 23 years, 24 years? On top of a high, it may not take much to drive this market down in a big way. And I personally am comforted by one of the big differences with winning with Camarda is that we have downside protective strategies for those that want to use them that we think have been working really well lately. Actually, when we flashed red early on, when in the Iran war, and we got out, and then we got back in, and we're narrowing a lick, but we had that net underneath the portfolios that I think a lot of clients are comfortable with. All right, so let's give Lou and Anna the last word. Anything that you'd like to wrap up with?
Yeah, I mean, just know that we are watching what's going on in the world. If you have concerns as our clients, reach out, but we are watching, and we are evaluating and making changes as we see fit to, again, downside protect, and again, position the portfolios, the best that we can.
Lou? Yeah, well said. I mean, we're in the middle of our quarterly review cycle right now with clients, so we're reaching out actively to you guys. If we haven't already spoken with you, we'll be touching base probably in the next, this week, next week. And, we'll be discussing more of this in more detail with you. And obviously, if you have questions, come prepared with those questions. We're happy to answer them and have those conversations with you to hopefully, alleviate some of the concerns.
Yeah, and also Lou and Anna are really building out the personal wealth advisory team. It's a couple of young folks now. Many of you probably talked to Nick. Another bright young fellow by the name of Milan is joining us. So you'll be hearing a lot from them to do some, to help amplify the quality and level of advice that Lou and Corey and Anna are able to deliver you. And one last thing, we have a new thing called Camarda's Minute Money. And what is Minute Money? You know, we've been doing a lot of short videos, 30 seconds, 45 seconds like that on YouTube and Instagram, I think, and Facebook. God knows where you probably know more about where they're going than I do. But we're like up to 100,000 views. And the reason I tell you is because there's a lot of really solid information, minute money, in less than a minute, or minute wealth, that we'd like to share with you guys. So we're going to be getting an email out to show you how to hook up on Facebook or Instagram, whatever your preferred social medium is. And then Anna and Lou and Nick and Milan and Corey will be reminding you about this and trying to show you where the link is so you can follow if you want. You'll get one a day, watch it or not, very blessed. And also, if you like it, we encourage you to share it to get it out to your friends and so forth who may benefit. You know, whether or not they ever talk to us, that's fine, but I think they'd find the information valuable. All right, so that, you know, we certainly have gone on far longer than we should have. Hopefully, almost 20 minutes, that you have enjoyed this. And we look forward to another episode next week. Thanks so much for watching. For now, Dr. Jeff, along with our super CFPs, Anna the Wonderlick and Lou the Versil. Thanks so much for watching. Bye-bye.